Happy Friday and welcome to Friday Flows. It's where I cover the investment flows in the ETF universe to kind of give you an idea of what investors are thinking and what they're putting their money into. So last week was a interesting week, a huge day on Monday. Markets have been kind of flat since then, but investors, based on where they were putting their actual dollars, the S&P 500, it was a risk-on type week. $4.6 billion going to SPY, 1.3 going to IVV, BlackRock's version of the S&P 500, and Vanguard's version took in over 750 mil. So investors very much so back risk on investment flows. There were some others within the top 12 and individual funds that were still on the bond side. But in general, the amount of dollars going into SP 500 really, just spells, a risk on sentiment. On the downside, this week, again, lots of pulling from bond funds, tips, gold, silver. The biggest one being a gold type fund, almost 2.8 or almost $3 billion coming out of that. GLD, which has been around forever, 764 million out of that. So again, investors going from a risk off to a risk on from the S&P, going back into the S&P. Jumping into SPY quickly, you can see over the last month, it's been a steady build up over this last week. Again, starting last Thursday, big numbers going in, 2.4, 1.1, 2.1 on Monday. The rest of the week has been flat, and then yesterday was 1.2 came out. But overall, over the last month, you can see the flows have been heavy into the S&P 500 fund. IVV, again, BlackRock's version of the S&P 500 over the last month, again, has been taking gains. You can see not quite the gains of SPY. SPY is the big daddy of them all when it comes to the S&P 500, has the most flows and the most assets of all of them. So those numbers don't tend to be as big with BlackRock's version or even with Vanguard's version. But the sentiment on all these is flows over the last month. And then the last week, you can see, even though SPY was taking in big numbers, these aren't huge numbers for VOO. And then the downside, I want to jump into one of the ones that was on the downside was the Vanguard short-term corporate bond. This one is a little bit interesting to me because if you were going to take risk off the table and you want to get back into the equities, I wouldn't think that you would be coming for your short-term corporate bonds because this is the bonds that is going to be doing the best with rising interest rates, especially in the short term. So a little surprising to me that investors have been pulling from this for over the last month, and then as you can see over the last week, really kind of big numbers coming out of here as investors have looks like they've reallocated to equities. Again, really kind of bouncing around. Retail investors or investors overall, day to day can really make moves. The market's probably not what you want to be doing in your portfolio, but just kind of gives you an idea of how people are thinking and reacting to the environment around them. So, jumping back again. Equities, big time movements into the S&P 500. Anything that was kind of a short-term safety haven, gold, silver, tips, short-term bonds, another gold fund. Those were investors were saying, you know what, I need to get some risk back into my portfolio. So that's what investors were doing. Kind of interesting from my standpoint, but we can't always agree on everything, I guess. So I hope you have a great weekend, and I will see you on Monday.